Hi, I'm Ed Butowsky. After 35 years of being in the financial services business, I have finally found a platform that does what I want, which is educate people about how to properly forecast and manage their money. Emile Westergaard, who you see here now, has created this IVoT Academy, which is far and away the most comprehensive program I've ever seen about teaching people how to protect themselves against people who look and sound like me. And that's one of the things that I love about this, Emile, is that educating people is the key to what needs to happen. And too many people out there are getting misinformation. And I really, really love everything that you've done with IVoT Academy. So why don't you take us just a little bit about your background, give us about 1 minute on your background, and then how you went ahead and created IVoT Forecaster.
Sure, Ed. Thanks for the introduction. And yeah, so I spent 20 years on Wall Street as a professional investor, investing in the healthcare industry, specifically running hundreds of millions of dollars, and developed tools and processes to run that money, which I realized along the way I could actually adapt for the general public. And so essentially what we've done is taken some very sophisticated investing tools and made them accessible to really anyone. And that's the idea of the platform, is that we can train you in how to use our tools to run your personal money, to invest, even to run a business, based on very sophisticated ways to analyze and understand, and as you mentioned, forecast the future with your money.
And what made you want to do this, Emile?
You know, what frustrated me a lot as someone who was a very good investor and fundamental investor, again, we're talking not about technical investing, we're talking about really understanding and forecasting businesses over the long term to find the best business to invest in. What I found when I read the newspaper, when I watched CNBC, was people were pulling a lot of opinions out of their, whatever you want to call it, but they really didn't address the fundamental issues that drive a business, which are cash flow, meaning sales growth, and expense margins. And that is how you really invest as a true investor. I just didn't see anyone out there teaching people how to do it, nor providing tools that made it accessible to anyone.
So the IVoT Academy, you have a free version and then you have a paid for version. Can you explain the two differences?
Yeah, sure. We want everyone to get a chance to get a taste of what we're doing, because we do think it's different than what's out there right now, as you said. So you go through our program and we have an introduction to our method and to essentially how to look at money from a systems perspective. When you complete that program, you then can pay for our certification programs in personal money and in investing. And those are, again, priced at a very reasonable. It's $40 for the program once you have gone through the initial program. And then we have additional training webinars that you can sign up for on our platform.
So this is all encompassing, and everything that you need to know about investing you can get through the IVoT Academy. I encourage everybody to click the links and learn more about this as soon as possible.
Yeah, and maybe just one more thing, if it's okay, Ed, is just that, you know, at the core of the platform, and I can pull it up real quick, are our fundamental investing tools that we feature on our weekly show. So do watch our weekly show. And if I just go to that for a minute, just so people can see the reality of this, you know, this is the platform. And if you go to your toolbox, you have your personal money tools and your investment tools. And these are the tools you use to forecast the future. This is the AT&T tool, which has the source code. We're not talking about opinions. We're talking about pulling source code from the company's filings to help you learn how to forecast the business. And what we do is to teach you how to use these tools to create your own value for the company, so you can be a sophisticated and intelligent, professional, even level investor. Again, the more you practice, like anything, the better you get. And the more you join us for training programs, you can become literally a professional level investor on our platform.
That's great. And as I said, I encourage everybody to look into this right away, because it's a really dynamic tool. And Emile, I'm really happy you put this together. So thank you.
Thanks for supporting us, Ed. We really appreciate you. Welcome to IVoT Investing. Our stock of the week this week is NVDIA, which has traded up 50% since April when it got hit by the scare in China with competition. We're going to take a look at the stock using the IVoT Forecaster. It's got a current cash flow value of $89. So at 145 bucks, it looks expensive, but is it really? It's growing cash flow at over 50%. We're going to discuss that coming up soon. And now, Andrew, go ahead.
Great. Yeah, this week we're going to take a closer look at the labor markets and most recent unemployment and employment data that we have gotten. So what is the real picture behind the scenes, and what are the probability of US falling into recession in the next 3 to 4 months? More to follow.
Great. Well, welcome to IVoT Ion Investing. Our show is committed to discussing long-term fundamental investing. And we're here today with Andrew Tang, our market expert, and myself today talking about equities. Our host, Ed Butowsky, who you heard in the opening discussing with me the IVoT platform, will be back next week. And so, Andrew, why don't you give us your update on the market, what's going on and what you see?
Yeah, one of the more interesting fact is the not so obvious fact that we're seeing, of course, is the labor market is showing some sign of weakness. But what we're seeing is, based on the revision of the last 3 months, there was a downward revision of 95,000 less jobs for March and April. So underneath all that, it's basically showing a much darker picture than what it seems to be. Our labor market data seems to be, chugging along fine, but it is very uneven when it comes to job creations. We're seeing robust job creations in healthcare, in social assistance, and also in the service sector. But manufacturing activities, as you can even predict and just think about it, it is absolutely, coming down. And then when it comes to the tech sector, we're still going through that overhiring period where the more layoffs is still happening on a regular basis. And of course, the introduction of AI has promoted or steadfast the layoffs in that particular sector. So all told, labor market is painting a much darker picture or doomier picture than what most people think. So that's where we're at, with labor markets. And then when it comes to probability of U.S. falling into recession, we follow a company by the name of Recession Alert. And this data, it's updated about twice a month at best. And the current model is showing that the probability of U.S. falling into recession in the next 3 to 4 months stands at a little bit above 80%. So exactly at about 81.13. We're going to get the updated data soon, but this is quite high. And if you think about that, with the transition that's happening, there's still a lot of uncertainty, and people are not clear as to what's going on with tariffs. We understand that the White House is negotiating with countries and certain companies individually, but the public is still overall, it's still very uncertain about what's to come when it comes to tariffs and the policies that are going to set in place. The worst thing that I believe is that, what's said in the morning can change in a few hours in the afternoon. So that's really, bringing a lot of volatility into the markets and also into the mindset of many businesses and households and investors. So what does that all mean when you add that together? Well, when we all add that all together, what it means that it's the Fed is most likely not going to lower rates in this month's meeting. And the reason why is, if we are uncertain, I'm sure the Fed is also uncertain as to what's to come, what to expect. We believe that the Fed is going to be a little bit more data dependent and see what the end results are. We expect the short-term price adjustments, it's going to be up. In most cases, prices will go up temporarily, for this adjustment period. over the long term, if we are successful bringing manufacturing facilities in, it will take some time. And during the transition period, I wouldn't be surprised that we go through some soft patch, in terms of GDP growth.
Now, I know, Andrew, and I would say you're kind of, how do you say, you're like the market in the sense you didn't mention anything about what's going on in the Middle East this week.
Nope.
In the context of the markets, which also seem to be kind of almost ignoring it, which is, I know there's been some volatility in the price of oil, which is, I guess, not surprising. But other than that, well, first of all, it seems like the market is not that tied to the price of oil. If the volatility in the price of oil is not affecting the market, is that true these days? And then secondly, are you as sanguine about what's going on in the Middle East as the market seems to be?
Well, I think there are a couple of let me unpack that. So there are a couple of questions there. So here's a chart of showing that the WTI crude oil futures. So you can see that the trend of oil prices has been going down. It has hit such a low level. So when the news broke out that Israel attacked Iran, that oil prices was already hitting a rock, I wouldn't say rock bottom low, but this is a very low price. So the retracement from the extreme low prices, it's normal, it's expected. And sources have also told me that most of the oil from Iran, it's going to China. And so in terms of the global supply, it's really not a disruption to the global supply at all, especially when U.S. is also producing domestically. Okay, so when I see a imbalance of supply and demand in the global oil, I don't see a disruption at all, and that's why you don't see a whole lot of reaction to the negative side. But of course, there are going to be traders out there, trading on news headlines and keywords. Those black box trading models also have to be adjusted. What I'm saying is that I believe over time, what I've seen is that the investor and traders have also becoming a little bit more desensitized, and they have to react less to the headlines because we understand that it can change. And that's why I didn't really go into all that. But since you brought it up, I really don't think that this is going to be a huge effect, in the marketplace right now, unless something drastically negative happens, like a nuclear disaster or something when they bomb the facility. Who knows what can happen? But so far, when it just come to specifically with the oil market, we believe it is quite stable, and the global supply demand, it's in good health.
All right, well, why don't we move to our stock of the week, NVIDIA, and then I'm going to actually let you take a big part in the conversation about the company after I kind of walk everyone through our IVoT Forecaster tool. Obviously, NVIDIA is a very important stock, not only in its own right as an AI company, but also really has an impact in almost every sector these days in terms of thinking about the future. So I'm really looking forward to talking to you about that, Andrew. But first, from a pure fundamental investor's perspective of cash flow analysis, let's go to the tools. So this is the IVoT Forecaster. I'm going to make it a little bigger for everyone here for NVIDIA. And you can see right now the stock's trading at $145. As I mentioned in the intro, it hit down close to 90, I think was the low back in April, and has completely rebounded. So we'll ask Andrew who back, by the way, in April, was correct in saying that the fear about China was way overstated. So I'll give you a kudos for that, at least in the near term. The company did $21 billion in cash flow in the first quarter of their fiscal 2026. They're already in fiscal 26. And you can see that equates to a cash flow value of $89 a share. So you're paying a 40% roughly premium to buy the stock right now to its current cash flow value. That being said, as I said in the intro, you can see it right there. A year ago, their quarterly cash flow was only $14 billion. So they grew their quarterly cash flow year over year by 56%. And so really the question is, if they can continue that level of cash flow growth, then, and we can use the tool to take a look at that, this is actually still probably a pretty cheap stock. Again, that's all user-based. You come in and you can make your own assumptions. But if we just say sales continue to grow at 69%, sorry, let me put the right number, 69%, you get a $400 price target on NVIDIA, which, means still looks pretty interesting at these levels. Obviously, on that basis, if you believe the competition's not an issue, then 90 was a real gift horse moment. The other thing important to note is their expenses went up quite a lot year over year. So their cost of goods went up by from 21.6% spending on making their products up to 28.7. What's that? That's a 710 basis point increase in costs. You read through, I think they're actually initiating some new manufacturing processes in their data centers. So my guess is that's going to revert back as those processes mature. So again, if I went in here and said, well, they get back down to even 24%, now you're back, you're all the way up to 445. So that's obviously very high level. We have a level 2 tool in which you can look at the different segments of the business. I will say, however, that the data center business here is one segment, but really drives the value of the whole company. They have other things, gaming and such, but really the vast majority is coming in the data centers. And obviously that's the work they're doing with corporate and various other companies in terms of using AI to improve their processes and, as you say, get rid of employees maybe too. So I'm going to get off the tool. Again, come to IVoT to use that forecaster tool. You can join our platform. The links are in the video here. But let's now go to a discussion of what we think is going to happen to sales. And if you have any thoughts on the costs of goods as well, Andrew, why don't you take over from here? The
Sure.
business, I'll say, better than me. So go ahead.
Well, just based on the last conference call with Jensen Huang, he reiterated two things that's really most relevant here. One is that the demand of compute from inference, basically the AI, it's not training, it's running, not even training, okay? Basically based on usage of AI at the current state, it's growing beyond their expectations. So in terms of the sales projection or the growth projections, we believe at the minimum it's going to be in line or even higher. So that's the really good news when it comes to the projection of growth. Some might say, even before the last earnings call, we're saying that, hey, NVIDIA it's priced at perfection. They have to grow that X amount, and we are not sure if that's going to happen or not. Well, he came back and basically stated that it will happen. The demand for inference and demand for compute, it is more than what we were expecting. And so at the very least, we can expect that the inline growth, it's going to be intact. Now, let's talk about competition. When we look at competition, there's really nothing out there that it's comparable, unless there's a new player out there that comes out with a new chip that is cheaper and a new ecosystem. Is that going to be in the US area, or is that going to be from China? Well, most likely it's going to be from the US, and not from China, because the China still needs to catch up in terms of the quality of the chips and how is it usage, right? So Huawei is doing a fantastic job. I understand that they're working very diligently on trying to compete, but there is still somewhere around 50% of where we are right now in terms of the chips capability. And when it comes to an ecosystem, do you think that there is another player that's going to come in, create a new ecosystem, and then sell into the market and take market share as fast as people can expect? And that's just not going to happen. And then when it comes to sales to China, well, sales to China, it's just going to be a small fracture, a portion of their forward growth numbers. And so they already took a write down on it. And when it comes to cost of goods sold increasing, Well, I wouldn't be surprised internally. And also, if they are serious about bringing manufacturing facilities back to the US, every corporation is going to have to spend money on that effort. And so I believe that the cost of goods or the expenses jumping higher is not going to get to be exponential or too crazy, in terms of that data. So the growth projection seems to be confirmed, and I see, institutions will start buying in NVIDIA again. So that scares, and that price for perfection period, I believe, is officially over. Yeah, so
Well,
that's
again,
what
I
I'm
think
seeing.
one of the cool things about our tools is you can dial in the growth, and even as a value investor, if cash flow is growing at 50%, this becomes, believe it or not, a value stock. Not
Yeah.
even close to price for perfection. If everything you're saying is true, the one thing I might add, and you can agree or disagree with me, is the longer it takes competition to come, the higher the switching costs become.
Exactly.
People build this more and more into their platforms, and so now it becomes like kind of becomes a monopoly, because people can't afford, once they start building all their systems around these new chips from NVIDIA. I don't care. I mean, someone's got to really break the game to begin to come into a place where they're already built into the quality control, the regulated stuff, everything becomes much harder to change the longer we don't have good competition for NVIDIA. So I
I
am a
also want
value
to,
investor who finds this very interesting.
yeah, just very quickly, I want to talk about, because I get asked a lot about this. Say, what about DeepSeek? What about somebody else coming along with a more efficient model? So the end result is that we have talked about and speculated and worked around the models. And fact of the matter is that for those players who can afford in this AI race, they always choose to win and not to save money. Okay,
Right.
remember that, and that's a fact. So for all those players, the top, companies that can afford NVIDIA chips, they will always choose to spend the money and win the race and solve the problem and have the most results. For those who can't afford it, there are companies like CoreWeaver, that can, rent you the space of what you need of the compute power.
Yeah.
So, that's where AI is going, and it's not slowing down anytime soon just because there is a cheaper model out there. But I have to say, thanks to the DeepSeek model, now almost every large language model include the reasoning algorithm in there. So thank you very much. It really benefited the world globally and not create chaos.
Very interesting. Well, I think it's obviously it is, as you were saying. What I wanted to point out was, I think the thing to notice is, for most, if not probably all, almost of the companies using these chips from NVIDIA, it's an immaterial item on their cost structure.
Yes.
It's very material to their business structure, but buying, for most of these companies, buying these chips is not good. Even someone like Amazon, who's spending a ton on these chips, on their overall P&L, it's not going to really move the needle that much. So I think that's obviously, and again, another good thing. As you say, people will stick to the premium price model for a product like this that's so core to their business strategy. So I think, I guess in this way I'm agreeing with you. All right. Well, that is our show for this week. I want to thank you, Andrew. I want to say that, you're a great analyst on the markets. Really appreciate your input. And I think it's fun to use our tools and discuss these companies from a fundamental perspective, not just from an abstract opinion. So we'll be back next week with another company. Please join us, and please subscribe to our channel. And soon we'll be launching the IVoT Academy, where you can learn to use these tools and platform.
Great. Thanks for having me. See you soon.